Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
Good morning, everybody. Welcome back to another live stream. Thanks for being here. And as always, as we prep for markets, it is a Friday, so got the weekend around the corner here and watching to see how markets close this week. Hey, James, how's it going?
Hey, good, Nick. How you doing?
Pretty good. James, what's going on and what's on the radar for us?
So really quickly before we get into that, I wanted to shout something out. We have, if you are unfamiliar with what's going on, we have a trading competition happening right now. We are currently at the end of week 2 of the competition with 1 week to go. We have 8 members of the A1 trading community from all over the world competing in this competition. They have their demo account set up. They started with $10,000, and we have episode 2 will be coming out later today, later this afternoon. And so I just wanted to give that a really quick shout out before we got started, because everybody in the competition has been working really, really hard, keeping up with the competition, making videos, update videos to show off their trades and thoughts and analysis. And so I said it in last week's episode. I've said it in this episode as well, but I just, love giving these guys a big shout out because they're doing such an amazing job. It's not easy to step in front of the camera, record yourself and talk about, trading, because trading can be very difficult, but they're doing a really, really amazing job with it. So I wanted to shout them out really quick. And again, that will be coming out later today. So be on the lookout for that. We'll probably set up a premiere for that so that everybody can kind of group in and watch together, and it'll have the live stream chat and you can talk about it. Hopefully, maybe we'll even see some of the competition members in there as well. But with that, we can talk about what's going on in the markets, and we can take a look ahead to next week, actually, because we don't have anything super important happening today. Way earlier this morning at 2 a.m. Eastern, we did have retail sales numbers come out in the UK. Those did not look very good. But let's take a look ahead at next week so that we can get an idea of what the biggest and most pressing news of the week is going to be heading into another trading week. So here on Tuesday, we have a lot of news over in Europe. As you can see right here, all of it happening while we will be asleep. But at 9:45 a.m., we do have flash service manufacturing PMI numbers and flash service PMI numbers. Those will definitely be interesting to take a look at, as well as some Australian dollar news later on in the day as well. On Wednesday, we have some Canadian dollar news. They're going to get their new monetary policy statement, currently forecasted to remain unchanged at 5% here, holding a Bank of Canada press conference afterwards. On Thursday, the Euro area is also going to have their new monetary policy statement. Their interest rates are also forecasted to remain the same right here at 4.5%. And following that, we're going to have advanced GDP numbers, advanced quarterly GDP numbers here in the U.S. And as always on Thursdays, unemployment claims as well. And then finishing up on Friday, 2 more U.S. news events that could be market moving. We have core PCE price index and revised consumer sentiment out of the University of Michigan.
Yep. Thanks, James, for that. And again, should be an action-packed week as it was this week. And guys, definitely take a look or keep an eye out for the competition video, which will be dropping later. Should be interesting to see that. James, thanks for coming on and giving us the update, and we'll catch up with you later.
Yep. Thank you.
All right. Okay, guys. So in terms of movements today, so again, we've got all that news coming here next week. We'll be covering it as always on the show. We'll be having guests throughout the week coming on, sharing their insights, fundamentals, technicals, as we do usually. Let's start out by taking a look at the dollar here. The dollar index on the daily chart still intact to the upside, though taking some pressure here this morning. My bias on the dollar has been bullish, and it still is bullish. I mentioned, I've mentioned that I have been short Euro USD. So we'll see how that trade plays out. We'll talk Euro in just a moment. But dollar index overall still intact on the daily, though on the 4-hour chart, taking a little bit of a beating here as we get going into the New York session. Price sitting at support. I would say that if you're a day trader out there and you're short biased on the dollar, watch for failure at this level. If we do see a breakout to the downside, there could be that continuation play for dollar bears, as you do have this longer term upward trend that is being challenged on the technical analysis side. As you guys know with the show, we try and keep it a good mix of fundamentals and technicals, both in the guests that we bring on and in my own analysis that I do within these shows. So lots of people in the chat today. Thank you for being here. 180 of you. It is a Friday, so usually streams a little slower, but good to see some regular faces. And we got Ivan FX. What's up, man? Good to see you. For the Culture FX, what's up? Welcome back. Good to see you here again. So we're taking a look here in terms of markets. What is going on? Well, one of the big stories is, of course, the situation with gold, which gold is probably going to go even higher, I would imagine, in response to this dollar weakness here this morning. Gold has continued to be incredibly strong. I've made my point here about gold. When we saw the Russia invasion of Ukraine, a serious catalyst was put into place for gold, which popped gold all the way back up to the previous highs around 2070. Well, with this crisis that we're seeing in the Middle East right now, it's been really, really tough. And that fear has definitely made its way into the gold market. The gold market, as well as the VIX, are both up. The volatility index is what I'm referring to. But we're at a level of resistance. And I think it is very interesting to watch how prices react to this area. If you get the breakout, if you see fear, concern, and worry elevate further, there is a very strong probability, I think, that if you get the breakout here, that we probably go right on up to 2054. Because what is likely to get us above these highs, by the way, these are the summer month highs. We are sitting at the summer month highs here as we go into late October. We're all the way back up to 1980. And the question is gold going to have the gas to break through this level? And the answer is not in gold. The answer is not in any purely technical chart, in my personal opinion. The answer to that question is going to solely rely on a catalyst. Because when you have these big run-ups, what's going to drive price to run up much further than people thought? It's going to be a major geopolitical situation. Am I calling for that to happen? No, I am not a fortune teller. However, if it does happen, I think short term you see gold breakout. Any pullbacks, in my view, are possible longs. Okay. So that is a short term idea that I have on gold. Longer term, I think the gold market is going to stay bowing down to the dollar, as it has for a very suspended period of time. You ask yourself, why is all of this, just back and forth over such a long stretch of time for gold? Well, it's because that dollar has been really, really strong, and gold is priced in dollars. So if the dollar continues to be strong, it's going to put pressure on gold. But right now, for the short term, momentum is favoring the bulls. I have no trades on, no longs, no shorts. And if you caught some of the long side, that's fantastic. We had this key breakout, which was a really impressive move here. And we'll see if this one wants to break out through the highs. That would be, again, where we go with this. So you need a catalyst, you need a strong break, something substantial to get us above those highs. Otherwise, I think if you don't get that, you probably see gold roll on over. Real quick, guys, I want to let you know that we are doing something a little bit different today. We have opened up some free stuff for you guys here on this day. And I want to tell you how you can get access to it. We're going to drop a link in the chat real quick to our message center. And we got some special perks for everybody in the audience today. Check it out. Click this link in the chat. If you do, here it is. This is what it looks like. Click chat now. and click the free Discord, Telegram, or EDGEFINDER details. And if you click this, it's totally free. We're getting people to join our Discord, our Telegram, and EDGEFINDER. All you got to do to get access to those things is just shoot us a message, and someone from our team will send you the link. We like to meet people that are going to join so that we know we're not sending the link off to like a robot that's going to spam our Discord server. We have definitely experienced that in the past. So if you'd like to send a direct message, you'll be in contact with someone on our staff. Our team here at A1 Trading has 3 different reps in the office that can hook you up with the Discord if you'd like access to that, the Telegram channel, and some free EDGEFINDER resources, all of which are totally free if you message us here on the stream. So click that link while we're here live, chat with someone on our team. We'll get you hooked up totally for free. So yeah, there you go. Anyways, yes, so gold continues to press up against this level. If you're watching gold, keep a close eye on that. We're going to watch to see if that level gets broken out. But probably, like I said, be very careful, gold buyers or gold sellers, over the weekend with gold right now. I think you're carrying a lot of overnight risk because, again, war does not care if it's a weekday or if it's a trading day. So Saturday could have something, hopefully, fingers crossed, some sort of resolution, some sort of peace talks, negotiations, or it could escalate, which would be, again, serious and very sad and probably cause the loss of life, which is terrible. But that sort of thing on market open could send gold up to here, or it could send gold down to here. So you have to be very careful holding gold over the weekend right now, in my personal opinion. But again, we'll see how that plays out. Continuing on from gold here for a moment, I want to just discuss some other markets here. Like I mentioned, I am currently short EURUSD, which I'm about break even on this trade. This is a longer term daily chart setup for me. And then also one that I'm shorter term long on is oil. Now, again, oil, some of that escalation, some of that possible sanctions situation, the same things that I think could be positively pushing gold up, I think are also pushing oil up, right? Supply issues, embargoes, sanctions, all of those things basically equate to hurt in the supply of oil area. And so that is why I took a trade yesterday on oil. I picked it up after a breakout and retest on USO. It's just an ETF that tracks US oil. And so I picked it up long. Price has made a nice move in my direction so far. I am looking to see if we can get some sort of higher low in order to trail my stop further into profit. So, so far doing okay on this oil trade. It's a relatively small trade just because, again, I do plan on holding this one over the weekend. So that carries overnight risk, especially with all of the stuff in, between Israel and Palestine. But I think, honestly, the reason I chose oil beyond just trading gold is because I like the oil stuff before. I liked being bullish on oil before there was any of this war stuff going on. I liked oil from a different perspective, the perspective of, the economies worldwide. I think that they're more resilient than what people were expecting. And I think that the demand for oil is not necessarily going to get eviscerated like many analysts think. A lot of people think, recession's around the corner and oil is going to go to nothing. And, like similar to what we saw in 2020, the whole world's going to kind of come to a grinding halt. I'm not really in that camp. I'm more on the camp of, the US economy, the labor market's still strong, consumers hanging in there. You still got a strong economy. And hey, China might be bouncing back too, another major demander of oil. So I like the technicals and I like the fundamentals on oil. So I'm staying long. Shared this one inside the Discord. Again, like I mentioned, you can join the Discord for free. If you'd like access to the Discord, link was dropped in the chat just a moment ago. Click that link, click free Discord, Telegram, or EDGEFINDER. We'll get you set up. It's totally free. And again, you can get in on the Discord by messaging us right now. Someone on our staff will send you the link once you get over there. So shoot us a DM. Anyways, again, I like oil long. We're going to go to Frank here in just a moment, my trading colleague. We're going to bring him in just shortly right after we thank our sponsor of today's show. We'll go to Frank, see what he's trading, what he's watching here this morning, right after this.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, and we are back with Frank. Hey Frank, how's it going?
Hey, doing well. How are you?
I'm good. And Frank, I wanted to, as always, ask you, what are you trading? What are you watching here as we get into what's been an otherwise really chaotic week? Oil is up, but so is gold, and stocks have just been getting crushed. So the dollar staying strong. Where are you? What's your bias in all of this?
Yeah, so the dollar is looking weaker today, but I don't think that necessarily means that the dollar is weak overall, as clearly we've seen the indices just get crushed this past week. Gold has been on a tear though, as a result of, things going on in the Middle East. But I am looking at gold again on the short side. There's a kind of a decision point here at the 1980s zone. So just a multiple top for this currency, or for this asset, and price is not broken above yet. So what I'm going to wait for is some sort of confirmation. Seeing a daily candle close with, like an inverse hammer on this zone might be an indication that, okay, maybe we're looking at a reversal here. But however, a break above this is just going to kind of confirm that the trend is still strong to the upside. So I haven't taken a trade on gold yet, but that's something I'm keeping an eye out for. And then currently in a pound dollar short trade, which is going against me for now. Just seeing, how strong the dollar was this whole week. And then, yields just continue to rise. Today we're seeing yields come down, dollar coming down. So GU, EU, all the dollar pairs are going to be going the other way. But I'm still, I think that what we're seeing today is, just kind of a Friday little rally. What we heard yesterday from Powell was that, there's still a lot of risk to inflation and everything going on, and rates are likely to stay higher for longer, and all this sort of stuff that's just it's not very dovish. It's pretty much the same thing he's been saying, but because of, we've seen higher inflation numbers in the past couple months and stubborn levels too that just won't really change despite these high rates. Keeping that hawkish tone and making sure that the dollar and inflation are going to, sort of comply with their rate policy. Mm-hmm. So I think it's likely that we do see another hike, but, it could be the end. However, in the meantime, it's looking pretty hawkish to me. I'm looking at we look at NAS or S&P, something like looking at the technical side. This looks like a kind of a reversal right here, but what I want to look out for is just this overall trend for the past couple months since July. So we've seen this channel just trending downwards, making lower highs, making lower lows, coming down, testing this level, bouncing back up. So I think, at least in the short term, we might see a completion of this move. We might see it come down here. And then at this point, well, maybe we can look for buys again. But NAS and S&P, they're all kind of moving the same way.
Yeah, it's been tough for the indices. And Frank, I want to add something to your commentary about Jerome Powell's conversation or speech yesterday. One thing that he said that I kind of actually liked, it was a mixed bag of a speech, as it usually is. We've mentioned this before. Jerome Powell, the Fed, in their statements, they are always going to lean defensive. When the Federal Reserve is actually succeeding in what they're doing, they're still not going to make it sound like they're succeeding in what they're doing. They're going to continue to be defensive. One thing that stuck out to me that I really liked about what Jerome Powell said yesterday is that he actually acknowledged that the 10-year yield may be doing some of the Fed's work for them. And I loved hearing that, because that actually, in some ways, is a very dovish kind of sounding thing. Now, it was a mixed bag because, again, as you mentioned, he mentioned that, you know, there's been really strong growth in the U.S. economy and that it's going to stubbornly work against the inflationary side. So there's a hawkish tone to it. But I liked the fact that he made mention to, he acknowledged that yields may be doing some of the work for the Fed. Now, if you guys don't know what I refer to by that, this is the 10-year yield. The 10-year yield is, of course, the bond market has been selling off like crazy, and these yields being higher, what they're going to do is they're going to slow down the economy inevitably, because any company that needs to borrow money, or the consumer that needs to borrow for a car loan or for a mortgage for their house, it's going to have some sort of adverse effect to the economy. And so the bond market kind of selling off may actually be helping the Fed. And there was questions as to whether or not the Fed would acknowledge that and actually take that as possibly an aid to their cause, or if they would just ignore that yield as just kind of a volatility. So I thought that was kind of a dovish sounding, and then you have hawkish kind of sounding thing. But for me, when you get a Fed that is dashing in some hawkishness, dashing in some dovishness, and it's neutral, for me, neutral in the stock world means bullish. If it's bad, it's bad. If it's good, it's good. If it's neutral, it's slightly good. So I'm still generally going to be more bullish on equities. I think that we're seeing the Fed not necessarily want to raise rates much further, yet at the very same time, you've got an economy that's strong. Earnings aren't getting destroyed. And I think that the consumer's kind of hanging in there. Consumer matters so much, especially as we go into fourth quarter, as people do their holiday shopping, et cetera. It's a very diverse list of problems that we're faced with, everything from geopolitical crises and the bond market sell-off. But I think that there's some decent risk reward to the upside. And also, you look historically, 5% is what the US 10-year has been throughout, the last like 30, 40 years on average. So, and stocks have had great years during those times. So I don't know. That's my bullish case, but we'll see.
I agree with you. Like, yeah. I'm not a bear on the markets, but I'm just looking, currently as of now. I mean, we talked about this early in the week about where price is going to go, and we were somewhere around here, and I was just like, I see it going lower in the meantime, and then it did, and then now I'm seeing it going down to this level. So I'm thinking it's going lower in the meantime, but like you said, in the like fourth quarter, as we approach, November and Black Friday, and then we end the year off usually on a positive note too. That's when I see things picking up. But as of now, it's just hard because, there's a lot going on right now. A lot of things have to brush over, and it's very tricky to trade. Like, we can see some pullback here. We can see all this, whatever, in the meantime, but until we sort of get past this sort of step, I guess, where investors have to reevaluate and see what's going on, then it starts to look more bullish to me. And I mean, I could be completely wrong in the price. The NAS, all the indices could come back up and break these highs, but just in the meantime, it's,
no, I think it's a very valid, concern in terms of equities, in terms of, the dollar index is still strong. And I think that, Frank, it to me has sort of on the longer term basis, as you mentioned, short term price actions wonky for stocks. For the dollar index, though, I think that for a while we saw the Fed just had that carrot dangling of we're going to raise rates higher, and as long as that was the case, it was very hard for dollar to go up while stocks went up. And I think things have shifted. I think that now we're seeing the Fed doesn't want to go much higher. They don't want to break anything, especially what we saw with Silicon Valley Bank. We saw banks get really pressured. I mean, a lot of banks right now have massive bond positions that are getting crushed. They're underwater and they're unrealized losses. But for those of you guys who know how bonds work, bonds, you only lose money if you sell them when they're in losses. You basically, you collect your coupon each year. And then at the end of the period of time that you've lent your money to the US Treasury, you get your money back. So if you lent them your money for 10 years, you collect your coupon each year. So they have a lot of unrealized losses. Those bonds are very worth less right now, but they will only be realized losses if the bank runs out of liquidity. So we saw that back in March, and we saw that this past year. So the Fed, they don't necessarily want to raise rates, but they may, if things continue to be bad, that may come back into the picture. That would be probably where we see dollar up, stocks down. But right now, I think that there is this ecosystem where we don't want to see rates go much higher. The Fed doesn't want that either. And, growth is still there, but we need to see, I think it's really going to come down to the inflation number, Frank. That's going to be big. But Frank, I'll let you go. Thank you for coming on the show, as always, giving us that Fed breakdown. I think that was some good fundamentals here for your day. And we'll chat with you in just a bit.
Thank you.
All right, guys. And we're going to bring in Kenzo here in just a moment as well. But before we do, let me just remind you guys, remember, if you guys want to join our free Discord or our free Telegram channel, or last one, if you want to get some free, stuff regarding the Edge Finder, we've got something cool that we've dropped. It's kind of our secret link here today. Click this link. It's in the chat right now. If you send us a direct message and have a conversation with someone on our staff, they'll get you access to that free Discord where you can see trades or trade ideas being shared each and every day from Frank and I. We run the Discord channel together with our staff. If you guys would like access to that totally free, or you want the free Telegram, just click this link that's in the chat, click free Discord /Telegram/EdgeFinder, and we'll basically get you those links. So if you'd like to join, click that link, click start chat, and a real person will speak with you, by the way. We don't have, it's not an automated robot. You'll speak to one of my employees who's in the office with us. So there you go. Take advantage of that. And yeah. So anyways, guys, we're going to bring in Kenzo. I want to get some thoughts from him on all of the latest. So, hey, Kenzo, how's it going?
I'm doing great, and I hope you're doing great, man.
Yeah, doing well, Kenzo. It's good to have you back on the show. And again, I just had a nice conversation with Frank. I think you caught a little bit of that. Did you want to add anything? I know you probably had some ideas. By the way, I love the hat. But what are your thoughts on Frank's comments?
I think I joined a bit late, but I think you were talking about what, DXY or something like that.
Dollar index. We were also talking Jerome Powell's speech.
Oh, okay. Sorry about that. So, yeah, on my side, I think the dollar is still very strong. Plus, these speeches from Jerome Powell, so they are still actually bullish. They sound like they're gonna increase the rates, but I don't think they're going to go harsh on that. I don't think maybe they will actually increase, because we still have a lot of events that have to come. We still have CPI for next month. We still have another NFP before they decide to increase the rates. But I don't think they will just go, like, they have to say that they have to push it to 2%. But I don't think they will increase. I think they will just stay where they are.
Yep, that's, and I think, I was making the point to Frank as we discussed that. I pointed out that I think that there is an argument here where sometimes for quite some time here in the last, year or so, we've talked about this environment where it's been pretty binary. The dollar has moved up, which has caused gold and stocks to go down. Specifically, though, I want to talk about the dollar and stock relationship, which I think might have changed a little bit. People have been
Yes.
a little bit confused by the fact that I think, the dollar can go up, but I also think stocks can do fine. People are a little bit confused, but here's the thing. I was making the point that the dollar going up right now is not necessarily just because, people think rates are going to go up from here. It might be that rates are expected to stay at where they're at for a suspended period of time. It also might be that the US economy is resilient. That's why we're seeing yields go higher. So I think that there's this case where the dollar going up may be good, maybe due to a good, strong US economy relative to other places. And a good US economy does not necessarily mean bad for stocks because rate hikes are coming, right? It's not that simple. It could simply be the economy's strong, and companies are going to do well in this environment so long as the Fed doesn't keep ramping up rate hikes, which they don't seem pressed to do, as you just mentioned.
Yes, that might also be the point, because if you check the retail sales, they were a bit higher, which means now people are starting to buy more. So that it's not actually all about the interest rates, because I don't think they're going to keep increasing the rates unnecessarily, even if the economy is getting better. And I don't know if maybe you saw the statement yesterday. They said, okay, it seems like the inflation is cooling down. So they will just wait for employment rates and see if maybe everything is cooling down. If everything is fine, they're not going to increase the rates. They're not going to cut, but they're not actually going to increase. And actually, that is good for the economy. So another thing, when we talk about the stocks, they have their own problem. We had inflation for quite some time, and the prices were higher for quite some time. So that's why actually they are struggling. But for now, maybe next year they're going to perform very well, because inflation has its own effect. Like if you did buy your stock like let's say big companies, they order their stock in advance. Like you order your stock in 3 months' time, but the price that you paid, it was a bit higher. We're talking like maybe, let's say, for example, when we talk about Apple or the other companies, when they order their raw material somewhere, those prices that have those inflation and the prices are still high. So those effects, they will keep coming until maybe next year, but it doesn't mean that the economy is not doing great. It's just that they order things like in advance, 3 months before, and they'll get everything maybe after 3 months or 4 months, and that still have that effect. So even though the prices are still going down, they're not going to just change overnight. So I think that is just over. It's after the storm of the inflation. I think things that will be going much better, because even last month, I think it's last month or last of last month, they did say the same thing, but they did not actually increase the rates, and that is actually good, you see. So, but for now, I think everything's, to me, I think everything's fine.
That's a great point, Kenzo, too. You could extend that out too to a lot of businesses in the US. I know that for some other places, it's rare to hear of longer term loans, such as a 30-year fixed rate loan. But many companies in the US, that's very common. Like I know some of my UK friends, they when it comes to purchasing homes, they can get like 3 to 5 year, and then they have to refinance again and keep doing that on their homes. In the US, the 30-year is much more kind of stock standard. But I wanted to mention something too about that, because you mentioned, maybe companies have purchased inventory previously. Well, other times, some companies have long-term loans locked in that they don't need new funding, yet they have locked in those long-term loans at much lower interest rates before the last 3 years, where we've seen escalated interest rates. So there is that argument too. If you have a 30-year loan, you have that money that you're able to do your campaigns and projects. Specifically like the healthcare world has been really under pressure, because if they do need to refinance, it's going to be awful, because healthcare is inevitably going to be so capital intensive for research. But many companies have done well. And I've also mentioned too, Kenzo, that I of the 3 stock indices, I really like the NASDAQ for the purpose that you get some of those companies that are not so dependent on debt, some very cash heavy, some very cash rich companies like Microsoft, Apple, Google, etc. So I do like the NASDAQ from that perspective. But we'll see. Again, a very interesting time nonetheless, and I would tend to agree. I'm pretty still bullish going into fourth quarter and into the new year when it comes to stocks. Kenzo, I want to shift gears. We've talked a lot about companies, stocks, and all that. Gold is breaking up into the 1988 levels. Have you been trading gold? And do you think this has potential to break out here before the end of the week, even at this 1990 level?
Yeah, I think there is. I think there is that chance that we will see gold trying to push the upside. But I, unfortunately, on my side, I did wait longer before I even take the trades because we had the resistance going on. But I started to realize that if you still remember when we were talking about gold, it was still very low last week. It was still trying to push from these areas. And now we can see that it's going up. But when we check DXY, it's also pushing to the upside. So it's very bit difficult if you compare them, if we compare gold directly with the dollar sometimes, because it seems like gold is very strong, but it's understandable because if you still remember, we did talk about the bonds which were going up. Mostly when the bonds are going up, most likely even the gold will also perform very well, which is something that doesn't really happen that much because mostly when the dollar is getting stronger, we will also see maybe gold performing not seriously good. So, but on this one is a bit confusing. Even if you're going to go all in, I'm not actually planning to go all in, but I understand the reasons behind the push. But sometimes it's better to stay out. I don't think I will be like aggressively going on gold. I rather go maybe on other pairs like EURUSD, which I've been actually trading for this week. It was going low, very nice for quite some time. And yeah, it's been actually doing good. Unfortunately, since yesterday, because of Powell, the market was just playing around. But everything on my side, I think, is very good. The best way is to stay out of gold currently until we get a proper structure.
Fair enough. Yeah, no, and I like that trade. I actually have a short on as well on Euro. So we'll see if that plays well for us as we go into next week. Kenzo, I want to thank you for coming on to the show as always. Good fundamental and technical breakdowns with you here. We do this each Friday. We call it Fundamental Fridays because we get Kenzo and his takes on stuff. So before we let Kenzo go, I just want to remind everybody, if you don't already have Kenzo on your YouTube subscriptions, take 2 seconds. It's free to do. Subscribe to Kenzo. Find more information and more content from him. If you'd like to get more content on a regular basis, just subscribe to his YouTube channel. Kenzo, thank you very much for coming on the show.
Thank you very much, man.
All right. And yeah, so good to have, we had a good list of guests here today. We had James join us, then Frank, then Kenzo just came in and ended us out strong there on the guest side. Again, I really agree with a lot of what Kenzo said there. I think if you're not involved in trading gold right now, I think you got to be really careful, right? It's very easy to get sucked into one side or the other of this trade. You might say, this is ridiculous, it's got to go back down. Or you might say, oh my gosh, this is ridiculous, I've missed everything and I'm just going to buy because it's going to go up, right? Don't let those sort of intrusive trading thoughts get to you right now. That's a quick way to be in a lot of pain and also to build habits that can cost you a lot in the future. I think if you're bullish, be careful, wait for pullbacks, wait for that sort of thing. And if you're bearish, wait for signs that this market may be done doing its whole thing here, because I don't necessarily think that it's just going to die from here in terms of bearishness coming in. I think that, you know, even if this does turn, it's probably going to turn slowly, right? So if you do have a bearish bias, you don't have to be the first one to get in, right? There might be opportunities, but again, we're not there yet. We could very well continue to see this thing run back up to the previous highs. And if you're just ultra bearish, you know, it could be troublesome. But watch this area. We'll watch to see how this daily chart candle closes, and I'm sure we will be talking about that as we go into next week's price action and trading setups. I just want to remind you guys, if you're newer to the show, here's 2 things for you to do. Number 1, hit the subscribe button with the notification bell turned on. That way you can get notified when we go live on YouTube. And number two, if you have not already joined our Discord or our Telegram channel, we have free daily trade setups and ideas being shot out to you on your phone. If you want to get notifications from Frank and I, here's how to do it. Click the link that's in the chat and just tag free Discord, Telegram, EDGEFINDER, and this will connect you with somebody on our team who will send you the link. And we do also like to meet our guests and viewers. So we appreciate you. Say hello and be nice to your to rep there. Again, it'll be a real person that you're chatting with, but just click that link. You can chat with us and ask for any of that. If you want EDGEFINDER details, free Telegram, free Discord, it is genuinely free. Just shoot us a DM and we'll hook you up. So as we close out the show, join us if you have not already. Thank you very much, all of you, for being here. And I hope you have a wonderful weekend. See you next time.
Before you disappear, one lucky person who joins the free Discord will win an upgrade to the VIP Discord for the rest of your mortal life. The VIP Discord features Nick and Frank's trade updates and analysis,
live webinars, chat rooms with traders from all around the world, along with so much more.
Click the link being dropped in the chat to secure your spot in the free Discord, and maybe you'll be our upgrade winner. We're dying to meet you.